Good morning, everyone, and thank you very much for joining me for this live stream. This is the morning market review, and it is Thursday, the 14th of March. My name is Russell Sharma, Senior Market Specialist at FXCM. And what I'm going to do is bring up our disclaimers. I'll keep this on screen for a few moments and we can just go through that. I'll keep it on screen for a few seconds. Okay, just another 3 seconds. All right, let's just bring up our market commentaries disclaimer. I'll leave this on screen for a few moments. Again, just another 5 seconds here. Okay, thanks very much for that. Let's go ahead and bring up the first screen that we're going to take a look at. That's going to be the real rates. Hey Raj, good morning. Welcome. Nice to have you on the live stream as always. All right, so this is interesting. What we're seeing is a movement up here, right? Just for March, there is this increase in real rates, and the increase in real rates, just keep that in the back of your mind. Just keep that in the back of your mind, because interest rates tend to be positively correlated to the US dollar, inversely correlated to the real rate. The correlations at the moment are a little bit higgledy-piggledy, so to speak. So keep the increase in the real rates at the back of your mind, just as we do the analysis. I want to go ahead and take a look at US dollar, see how the US dollar is reacting, given that real rates are moving up. Is there something worth looking at? Okay, and just keep in mind, this is the daily chart. Let's just take a look at this on the weekly chart. Okay, so I haven't brought up the US dollar just yet. I just want to do a bit more work on the real rate. Let's go ahead, just put in some peaks and troughs here. And let's go ahead, I'll bring in the trough. And let's bring in the peak. Okay, can you guys see me and hear me? Just let me know. Just let me know, because Kim's saying there's no picture, no sound. All right, let's just go ahead, bring in the high trough. All right, let's just keep an eye on the on how the real rate evolves from here. The reason why I think that it is important is because, again, real rate is a key driver of markets. So there's basically two ways. Well, there's actually three ways. The first way is we can move sideways, but the other two ways that I was thinking, we could actually move up here. So then we'd put in the higher peak. Then we'd have a higher trough followed by a higher peak on the real rate. The second way is that we could have a lower peak followed by a lower trough. So we don't quite have a trend just yet in the real rate. But what we do have is that a blue candle for the real rate today. So just keep that in the back of your mind. All right, here's the US dollar. Okay. So the US dollar, we did see that blue candle for the real rate. We've got a blue candle on the dollar for this week, but um, let's just look at it more on a macro view, on a wide lens. And effectively, what we have here is the US dollar looking like it's moving below its 30-week exponential moving average. What direction is the 30-week exponential moving average? The exponential moving average, it looks like it's starting to move downwards. It's got a slight dip in it. And then if you take a look at the RSI is below 50. Okay, so dollar potentially coming down here. We just want to keep an eye on that correlation between the real rate and the US dollar, but US dollar does look as if it is starting to soften up here, especially following last week. Last week's candle is quite vicious to the downside. Let's just take a look at euro. Okay, let's take a look at euro on a weekly basis. Okay, so euro above its 30-week exponential moving average, euro moving up. What is the RSI telling us? RSI is above 50. RSI is above 50. So there is some bullishness that's coming through there, isn't there? So dollar coming down, euro pushing up. Let's just take a look at cable. Cable was a bit, it was an interesting pair to watch given the wage data that came through. Let's just take a look at GBP USD. Remember, US dollar looks like it's coming down. Is that feeding into the pound US dollar? Yeah, it is. Pound US dollar. Where is pound US dollar relative to its 30-week moving average? It's above the 30-week moving average. And what direction's that 30-week moving average? It's moving in that northeasterly direction. Okay. What about RSI? RSI nicely above 50. So let's just summarize what we've done so far. US dollar dropping below its 30-week moving average. 30-week moving average coming down, RSI below 50. Therefore, it makes sense that the euro is moving up, okay, above its 30-week exponential moving average. 30-week exponential moving average moving in that northeasterly direction. RSI positive. Similar with cable. Okay, so just very interesting to see that on the weekly scale. Let's take a look at gold. Remember, gold and the dollar tend to have an inverse relationship. They tend to move opposite to one another. We've seen, I'm going to just bring up US dollar again. Let's just bring up US dollar again. Okay. Question, if the US dollar is coming down, all right, what would we expect for gold? I would expect gold to be lifting up. Let's take a look at XAU USD. XAU USD. Raj just pointing out that the euro and cable have reference candles on the weekly. Okay, let's just take a look at gold. Just want to bring that up. Lifting nicely. It is above the 30-week exponential moving average. Okay. What direction is that 30-week exponential moving average? To the northeast. Okay, here's the reference candle on gold. And then we already had a spectacular movement in the currency markets last week. As the dollar moved up, as the dollar moved down, the other instruments moved up. So gold also showing really nice movement to the upside. So let's just summarize. Dollar down, euro up, cable up, gold up. All right. Now, if the US dollar is coming down, let's take a look and see what's happening on the risk side of the markets. Let's take a look at, let's start off actually with DAX here. Okay, so let's go ahead, bring in the FXM instrument for the DAX. All right, so this is a slightly different makeup. And this, to me, has complexities. Factually, we are overbought. There's not much that we can say to dispel that. The RSI is above 30, but the stock market, in this case the DAX, doesn't seem to be too bothered by that and is moving upwards really at pace. Now, at some stage, we will normalize, okay? At some stage, we are at an extreme value now. At some stage, we will normalize. Keep that an opportunity for us where we can buy into the dip. Nevertheless, let's just ask ourselves some analytical questions that help us analyze the chart. Where are we relative to the 30-week exponential moving average? We're above it. What direction is that 30-week exponential moving average? It's moving up nicely northeast. Here's our reference candle. Okay, so Raj, I think what you pointed out is important. The reference candles on all these charts are apparent, aren't they? They're all apparent. At some stage, now it's quite. If they don't give a time, they say if they don't give an expected date of correction, well, it doesn't really mean anything because over time markets will correct to a weekly overbought condition. It doesn't really lend itself well to timing, and the reason is because it's a weekly chart. It can take weeks before this thing unfolds as opposed to days. Okay, and that seems to be the case with most risk on markets now. So DAX looking overbought. One market we don't look at all that often, let's just bring it up here. Let's just bring up the UK 100, the FTSE 100. Let's go ahead. Let's just bring that up. Okay, it's not one that we look at all that often, but let's just do a technical analysis there. All right, this is a lot more. This is messier. This is a lot more messy. It's messier than the DAX, isn't it? Look at all the sort of resistance we've got here. We can really draw in a big resistance zone like that. So it's not as clear as say the DAX, but it's not falling sort of flat on its face. Where is the FTSE? Where is the UK 100 relative to its 30-week exponential moving average? It's above it. So there is a positivity to the chart. What direction is the 30-week exponential moving average traveling? It's traveling in a northeasterly direction. That's positive. Where is the RSI relative to 50? It's above 50. So we do have a positive momentum with the FTSE 100, but unfortunately, we just got a lot of overhead resistance. There's a lot of overhang there. The FTSE looks much clearer. The DAX looks much clearer. Let's just go back to DAX just to show you what I'm talking about. You can see it's much cleaner, much clearer chart. Let's take a look at S&P 500 and NASDAQ. All right. Again, you can see the froth here. Can you see it? The RSI is above 80. That's uncomfortable. At some stage, that will correct, and we've got to be very careful. We don't want to be caught on the wrong side of that as traders if you're holding long-term positions. it might be something that we've just got to endure as it dips down and then moves up into the next impulse part of the market. All right. Where are we relative to the 30-week exponential moving average? We're above it. Direction of that 30-week exponential moving average, it's moving up nicely in that northeasterly direction. And the RSI is just overbought there. Let's just take a look at NASDAQ as well. Okay, so the NASDAQ's not quite as overbought, which is interesting. But you can see here that what we've put in is the potential pathway of correction, assuming that the weekly RSIs do show signs of moving back between 20 and 80, we would probably get some sort of dip. Now, a dip in an uptrend is something really to be looked at very carefully. Dare I say celebrated? When I say celebrated, celebrated provided we don't get caught on the wrong side of it. If we get caught on the wrong side, well, then we'll feel the pain. But if we sort of stalk the market and we just wait to see if we can get into those dips, okay, ultimately that's what we're looking to do. Is just difficult because of the weekly readings. The weekly readings are much harder to read than say daily readings on the RSI. But let's just summarize where we are, and then we'll take a look at some hourly charts just to see if there is potential opportunities as the market is about to open. But we've got dollar coming down. That's money moving out of the safe haven. We've also got gold moving up. We've got euro moving up. We've got euro moving up. We've got cable moving up. We've got gold moving up. US dollar coming down. At the same time, we've got a risk-on environment, but that risk-on environment is very overbought at the moment. At some stage, it is going to correct. It's just sort of hints of timing. Let's go down to an hourly chart just to see how things are setting up as we begin the day. All right, so just bear with me. I'm going to bring up our hourly chart here. We'll start off with the dollar. All right, here's the hourly chart for the US dollar. Remember, on the weekly, we're sort of bypassing daily for today, but the weekly is more related to a primary type of movement, and the primary type of movement is more related to the underlying fundamentals. Well, what would be interesting here, just to keep an eye on, is if we get a cross down on the US dollar. So that would be trigger 1. We would also need to get a trigger 2, and would need to see the stochastic rollover. If we get that, the next point is we'd actually need to see the stochastic come down to the lower quintile and hold. And if we get there, I think then the hourly is lining up with the primary trend. Okay, let's take a look at the gold chart. So if we get those rollovers, in the greenback, then what I would like to see for the dollar, for gold, I beg your pardon, I'd like to see a cross up in gold. I'd like to see a cross up in the EMAs. I'd like to see a cross up in the stochastic. We don't have these yet, so we basically are in hold mode. We've got to be patient here. If you take a look at the last 3 hours of dollar, it's been very, very quiet. The last 3 hour candles are thin, so we just got to see the volatility come back and effectively, hopefully, get the crossovers and the movement in the stochastic. Let's just take a look at euro and then cable very quickly. Okay, here's euro. Okay, again, if we get the cross down in dollar, then we want to see cross up in euro. That would be trigger 1. This would be trigger 2, right? And once we get those triggers, again, we would have to move towards the upper quintile. It's the upper quintile that really, that's where the magic happens. You see, once we get a movement up to in the upper quintile, we get some really nice swings. So that's what we're looking for. That's what we're looking for. Let's take a look at cable. Again, with cable, we're looking for a cross up. So this is interesting because cable's given us that cross. Okay, so this is one to add to the watch list right away. Okay, here is trigger 1. Okay, so we've got the triggers. Now we need the momentum to kick in, and that momentum will kick in if the stochastic makes its way up to the upper quintile and holds. So if we get those, we're potentially in business. But remember, nothing's guaranteed in this business. Always use risk management. Always. Stop loss, money management. Okay, let's just take a look at DAX. All right, so we've got the crosses in DAX as well. It's now all about the momentum kicking in. Okay, trigger 1, trigger 2, and then moving into that upper quintile. Again, if we move into that upper quintile, that's where the action takes place. Okay. Let's take a look at S&P, NASDAQ, and then we will conclude. If there's any questions, go ahead and start typing those in. Let's just take a look at SPX 500 first. We've got to take a look at UK 100 as well. All right, this is a good looking chart. This is SPX 500. Let's just clear the drawings. Trigger 1, trigger 2. Okay, but where are we? We're in the upper quintile. So there is a potential momentum move here for S&P 500. Just remember, it's frothy. At some stage, we're going to normalize. Before I do NASDAQ, we'll just do UK 100. Remember, the UK 100 weekly chart, to me, is the least attractive of all the charts. UK 100 not really cooperating. We would want to see some sort of signals to the side. That would line it up with the primary trend. We want to get with a primary trend. See if we get it again. If we get into that upper quintile, that's where the magic happens. Okay. And last but not least, let's take a look at NASDAQ 100. Okay, I like this chart again. I want you guys just to be careful here because of the overbought condition on the weekly chart. But here is trigger 1. Here is trigger 2. Where are we? We're in the upper quintile. If we hold in the upper quintile, it looks like we're going to have a nice day. Now, just before we sign off, guys, just bear in mind there is going to be core PPI out tonight. That's core PPI today. We already saw CPI come out 2 days ago, which was to the hot side. 2:30 p.m. ZA, which will be 12:30 p.m. UK. We're also going to get at the same time retail sales out. So that's potential market moving news for you guys just to be aware of. All right, I don't see any comments or questions. If you enjoyed this, please go ahead and click on that boost button. It would really help with getting the live stream disseminated. I really appreciate that you have joined me today. Please join me again tomorrow, where we'll continue to try unpack the markets and see how they've behaved over the last 24 hours. Thank you very much, guys. Have a very good day ahead, a very good evening. Thank you.